Our big story, of course, our other big story is Jerome Powell of the Fed delivering what will apparently be his final address as U.S. Federal Reserve Chair at the Jackson Hole Symposium. Our guest thinks that the Fed is likely to tweak its inflation target. And let's get his thoughts also on a possible rate cut here in Canada. We're joined in studio by Earl Davis, head of fixed income and money markets at BMO Global Asset Management. Great to see you as ever, Earl.
Good morning. Always good.
The Wall Street Journal says today inflation in America has been above the 2% target for 4 years.
Yes.
So perhaps no wonder that Powell is reluctant to, or has been reluctant to cut rates.
Yeah, and it's not necessarily because of the targets, because of credibility. If they cut rates with the inflation so far above 2%, then they start to chip away at their credibility, and that's basically their most powerful weapon in regards to influencing markets. So there's one of two ways today's speech could go in our eyes. One is they could soften that 2% language or the firmness around 2%, saying we're looking at the market from a contextual position, because they do have two mandates, inflation and employment. So just basically putting more onus on employment than inflation. Or the other one is they could just look at the economy and say we're getting, we're still figuring it out, because we're getting data both ways. We're getting weaker employment, sticky inflation. And we saw yesterday's PMI numbers. I think that was a surprise to the whole market in regards to the manufacturing pickup.
Very strong, yeah.
Very strong, very strong. So there's mixed data out there. Having said that, we do expect to see one ease this year, because we do expect to see further employment weakness for the balance of the year before it picks up. We think 2026 is going to be a year of growth for the U.S., based off of several things. One is the big, beautiful bill. There's a lot of lower taxes, more money goes into the private economy. It could push things up. Also in the big, beautiful bill, there's a lot of personal tax cuts that take effect immediately. They're happening now.
Sorry, I always get confused here. Are they confirming tax cuts that already were put through under Trump's first administration?
Well, they were put. So, for example, specifically, the two things: overtime won't be taxed.
Okay, yeah.
Tips won't be taxed. That was effective immediately, but the employers actually still withdraw those taxes from. They haven't said, and they'll pay it back in a refund next year. So there's stuff that's supportive of the economy, supportive of consumers. So we think we're optimistic heading into 2026, but we could have a little bit of a rough patch for the balance of this year.
Before I forget, what about Canada? How many cuts are we going to get this year?
We believe we'll get 2 cuts in Canada this year. Again, there's a window for them to cut right now. We saw the weaker headline employment number. Obviously, that was driven a lot by gasoline, but nonetheless, that gives them impetus to, or fodder to cut with. And we also have a sticky high unemployment rate around 6.9. If we get one more employment report before the Bank of Canada announcement, if we see weaker employment there again, we think that increases the probability of a 25 base point cut in September.
And this youth unemployment number is pretty disturbing. I mean, that's damaging for a young person's career if they, at the start they can't get a job.
Yeah, there's 2 unfortunate things about that. One is the youth unemployment in and of itself, very unfortunate, get a job, the morale and stuff. The other unfortunate thing is that from a political perspective, it has less input into those decisions in regards to the vote. The youth don't typically vote.
No, they should.
And a lot of the policies are geared towards voters, unfortunately. So there's an unfortunate thing there, but this is a longer-term, systematic and structural issue that we do have to take care of and address more.
I know some observers are saying the government should cut old age payments to people with retired people with a comfortable income, but I guess we can't.
And those are the ones who vote the most. So the likelihood of that happening is very low.
You have a couple of bond ideas for us. Yes. One is a Brookfield bond. Tell us about that,
the
please.
Brookfield infrastructure. What we like about this, it's a 5-year bond that delivers around 3.80, 3.90 yield, which is above the Government of Canada yield for a 5-year bond.
Okay.
And the 5.71 is the coupon. That's when it was issued.
But the yield,
the yield right now is 3.80. Why we like that? Because when you invest in corporate bonds, it's about your return of capital. You don't want a company to go bankrupt, and if they go bankrupt, you want to be supported. This is supported by regulated fees as well as inflation-protected fees. So they've been showing very good revenues. We like the bond, like the yield, and like the return of our capital in 5 years.
So a 5-year yield of about 3.8.
Yeah, that's correct.
What would you expect from a Government of Canada bond?
It's closer
roughly?
to 3.
Oh, I see.
Yeah,
okay.
closer to 3. It's
Right.
about 80 basis points difference between the two.
Sure.
So we like this additional pickup for something that we believe is very safe and solid.
And a Carnival bond, a cruise lines bond.
Yeah, this one's a bit more interesting. It is investment grade, so I wouldn't say a bit more risky. The business is a bit more risky because if you get a downturn like you did in COVID, the revenues dry up. Having said that, this specific bond is a first lien bond. So if the revenues do dry up and they do go into bankruptcy, you get the cash from the assets that they sell.
You get the ship.
Yeah, you get the ship. And this one yields 4.90 is the yield on this one. That's the coupon again, 7%, but the yield's 4.90, again about significantly above 5-year U.S. government bonds. And we like it. Like Carnival's been, they look good relative to their competition. Record users in regards to users right now, they've regained that. So we like it from a bit more risky, but still yet safe in our eyes.
Thank you very much indeed, Earl.
You're welcome.
Earl Davis, Head of Fixed Income and Money Markets at BMO Global Asset Management.